What's up, guys? It's Paul here from the 95 Investors Club channel. In this video, I want to talk to you about the absolutely precipitous drop we saw in the market today, as well as how we were able to manage it and handle this volatility. Okay, so as you can see here, a lot of the drop actually started early in the morning around 4 or 5 a.m. So obviously we couldn't have done anything here because the markets haven't opened here yet. But right after market actually opened around 9:30 a.m., we saw this instant drop where my account was down over 34k, which is, as you can imagine, was absolutely scary. But thing is, after the kind of crash we saw last March, this drop was really very, very small compared to how it was last year. But the real key that you have to remember here is, and I also mentioned this to my Discord members first thing as soon as we started seeing this drop, is you should not panic sell right away, because especially if you hold long-term shares, you only lose money when you sell. Okay, so this is a great time to actually buy the dip on companies that you really believe in, and that's exactly what we did. If you panic sell, that's when you lose. But if you just hold on, they literally bounced back to where it opened within 2 hours, which is absolutely crazy. So that's exactly why you should never panic sell. Okay, so right around here, once the market started recovering here, I did not pick the bottom, obviously, because it's impossible to time the absolute bottom, and also you must have heard the phrase, don't try to catch a falling knife. So I did not pick up anything here, but once we saw that it started recovering, I posted an alert to all our members that these were all the shares that I picked up today right around 10 o'clock. As you can see, I picked up Palantir, Tesla, Shopify, Snowflake, GHVI, which is merging with Matterport, Butterfly Network, Roku, Airbnb, and C3AI as well. So these are all the ones that I picked up pretty much in this half an hour window just before Powell was actually speaking. Okay, so now one of the main reasons that we saw this huge pullback was because there were rumors about potentially interest rates going up. We were seeing that bond yields and treasury yields were going up as well, and if interest rates go up, that's going to hit tech stocks a lot, because high growth stocks have been doing really well because they're able to borrow money at a really cheap rate and reinvest it back into the business to grow it. And people also really didn't want to put any cash in the bank accounts, because no one wants to sit on banks that are paying 0.1 or 0.3% interest rate. So instead of just wasting the money sitting in the bank, people are wanting to put them in high growth risky assets like individual stocks. Okay, so if interest rate starts going up, people might be more interested to start building up more into cash. We did see a huge rotation into value stocks. That was the biggest thing that we were noticing here. So one example here is Disney. One way we were actually starting to hedge our positions last month itself, I was posting some calls to our members about getting some calls on Disney. So that's what I've been watching out for. As you can see, Disney's up 2.8% today, up another 0.6%. So this one call that I alerted to my Discord members has been doing really well. We picked this up early in January, as soon as that we got that news about 95 million subscribers for Disney Plus, which is incredible. And they did shoot up immediately as soon as that news came out, but once it pulled back, that was a great opportunity to buy these calls here. So we picked them up a while back, average cost of only $375, and they're up 197%. So it was these value stocks that really held up. Okay, so I had some calls on JP Morgan as well. Banks were really undervalued in my opinion. And again, as I said, with rumors of interest rates going up, banks were shooting up like crazy. So as you can see, JP Morgan was up 0.8% today. I had some older calls which I took profits on today. I picked up a lot of them around 340, 350 range. I had 6 calls. I slowly started selling them out. I sold one at 530, 2 at 595, few more under 500. So I was taking profits along the way. So it was all these value stocks and banks that really started picking up. And that's exactly how we were able to manage this volatility. Okay, so 2 things that I wanted to share was, first of all, don't panic sell. Always hold your shares, especially with options. Learn how you can roll over options. Okay, so I posted 2 videos before this on how to roll over just calls or puts, or another video on how to roll over spreads. So make sure you learn how to roll them over, because there are so many different ways that you can roll over options, so that even if it's a losing trade, you're actually giving it more time by rolling it over, and eventually if it's a good stock that spikes back up, you can always at least break even or actually take profits on it. Okay, so make sure you're learning how to roll options over with shares. It's a great opportunity to buy the dip. Don't panic sell shares. And one key thing that I'll tell you, and this really helped me during the market crash last year also, was that whenever in doubt and you really need cash and you want to get out and you're panicking, only trim positions that you don't believe in. Okay, so we all have FOMO once in a while, especially newer investors give a lot more into FOMO, so they may chase hype stocks, they may chase ticker symbols that people mentioned it to them. So those are the kind of positions that you want to trim. For a while now, I was able to develop that investing discipline, and so especially during the March crash, that came in very, very handy, because I only focused on companies that I believed in for the long term, and I only trimmed a few positions that were speculative to me back in the day, and I only invested them back in solid companies like Tesla, Shopify, Nvidia, and all these companies. So that's the one thing you need to keep in mind: only trim positions that you think are too speculative and you don't plan to hold for the long term, and invest them in a good long-term portfolio of stocks that you really believe in and plan to hold for years on end. Okay, so in situations like this, if you're too heavy on options, that's when your account is going to get absolutely hammered. It's actually the long-term shares that are going to keep you up, but you could also use the opportunity of buying the dip and potentially get some longer-term calls or leap calls during the dip, and those are going to really accelerate your returns over time. Okay, so those are the main things that I wanted to share with you. Don't panic sell. Make sure you're diversified. We are seeing a rotation to value stocks, so have some exposure to value stocks, like I showed you, Disney, banks, Caterpillar, for example. So those have been helping out and cushioning some of the drops that we've been seeing recently. And also learn how to roll over options and manage risk accordingly, so that all your money is not expiring worthless through those options. Okay. If you enjoyed this, please be sure to smash that like button. Leave a comment below if you have any questions or any other thoughts that you want to share with me. Be sure to subscribe and hit that notification bell if you haven't already. Okay. Thanks again for watching, and until next time.